Hello my friends, welcome back to my channel. I'm Andrea and today I would like to show you my investment thesis on a PayPal. Before we start, please note that I'm just a retail investor, I'm not a professional, and you should always do your own due diligence and consult with a professional before investing in anything. So I bought the PayPal on the beginning of summer of this year, and I am in plus, between 20 and 30%. Don't know exactly now. I'm very satisfied with this, and I want to share with you my thesis why I bought PayPal. PayPal is around 1% of my portfolio. In the same time, I also bought Block, which also make like 1% of my portfolio, and but this is for another video, and here is my thesis for PayPal. So I am an income-oriented investor, but I think when it's about the PayPal, either they start to pay dividend in the future, or if not, I can use capital gains and reinvest it in dividend companies. So there, before we go to numbers, some general overview. There is concerns about the competition from Apple Pay, Google Pay, Block, but I think PayPal have quite a big moat when it comes to competition. So PayPal is seen as a very trustful company who will refund their customers if they got scammed, and therefore it stays a choice of many people. And also their simplicity, the transactions are almost seamless. I use PayPal, I like to use PayPal, and I personally never had any problem. It was always very seamless experience. I buy this stock with a 5 to 10 years horizon, because maybe we get a recession next year and the stock market will freak out, and then these kind of companies get usually get hit very hard. But I think PayPal will be around 10 years from now, and their business, however it will look, will be intact and good, and they will make a more transaction that they are doing now, just because of inflation itself, but also because the world is getting wealthier. And this brings me to numbers. As we can see here, I have numbers from Q3 presentations, and number of payment transactions is steadily growing. It's a not big growth, but it's a steady growth. So I don't think that PayPal is a dying company, as some people will say. And this is how they make money. They take a rate from each transaction, and this rate was in the last year decreasing a little bit. I don't think that it is very concerning, because I think there will always be some fluctuations, and this is a very light decrease only. And also, as we can see on the total revenue, the total revenue is growing, so a decrease in the take rate was offset with more transaction, which translate a higher revenue. So for those who don't know, if they make a transaction with 10 euro or $10, they take from it €1.86, and this is how they basically make money. They have also costs with these transactions, and so their margin on each transaction is 46% now, which is around a flat in the last year, which is good for me. So here's some historical numbers. Total payment volume was in Q3 2017 $133 billion, and in Q3 this year it was $423 billion. So the growth is there, at least for me it's good enough. Here are some things what they are currently doing and improving. They improved their mobile interface for even more seamless transactions, and people seems to like it because the transactions also increased in the last time. In Waymo business, they are going beyond peer-to-peer transactions, and they adding features like merchant rewards, the debit card cashback, and they refreshed their app. They are also cutting costs, which I think is good. And here is my investment thesis, or here are the numbers of my investment thesis. So currently PayPal is trading for price to sales of 2.5, which is below a 5-year average, which is a 6. So in the last 5 years, on the average, they had a 6 price to sales. Now they are at 2.5. They are trading currently at a 19 PE ratio, which is significantly below a 5-year average. They had also PEs like 30 or 40 in the last 5 years. On the beginning of summer where I bought, it was like 13, so this was, I think, the bottom. And the Tobias Carlyle, I don't know how to correctly pronounce his name, wrote the book Acquires Multiple, where he explained the return to mean. So most of the companies, they are fluctuating ups and downs, but they are fluctuating around some mean level, some average. And now we had some overreaction in the last 1 or 2 years where the stock price gets significantly below the mean. So I think the stock will get either to its mean values back, or maybe even higher when we have then some over-exaggerations in the opposite directions, like we had around the COVID boom. So the key takeaways is their transactions volume are still growing. They have a strategic cost control program. They are in an attractive valuation right now, and ecosystem continue to develop and benefits greatly from users' loyalty and significant service diversification. So I hope you like it. If yes, please give me a thumbs up and leave a comment with feedback. Not a financial advice, of course, and see you later. Bye.